Well, developing now, a wild day for the economy and the markets, as well as the banking industry.
This is all coming after two bank failures in less than a week, including Signature Bank, that's based right here in New York. The Dow closed down 90 points, falling for the fifth straight day, despite the government agreeing to shore up depositors in the failed Silicon Valley Bank. Now, some say the bank crisis could force the Fed to pause interest rate hikes in the short term.
All right, we begin our team coverage with Chris Welch now on how the federal government is responding to the crisis. Chris.
Yeah, Steve and Natasha, President Joe Biden and federal regulators say there is no cause for alarm, and they say the U.S. banking system is okay. Now, they have assured all depositors with funds in these banks they will be paid back in full. Now, what we are seeing here today is the fallout from what began to happen Friday, the failure of the largest U.S. financial institution since the height of the financial crisis almost 15 years ago.
Americans can rest assured that our banking system is safe.
President Joe Biden says there is no need for panic.
Americans can have confidence. Your deposits are safe.
The turmoil began Friday when U.S. regulators closed and took over Silicon Valley Bank, or SVB, after depositors rushed to withdraw money amid anxiety over the bank's health. Then yesterday, New York-based Signature Bank also collapsed. Both banks now controlled by federal regulators with the Federal Deposit Insurance Corporation, also known as the FDIC.
Yes, there is panic right now in certain ways. There's fear.
Maya Rodriguez-Valladares worked at the Federal Reserve Bank of New York and is now a financial risk consultant. She says the attention now should be on whether or not Friday's collapse at SVB could have been avoided. This is where federal regulations, or lack thereof, come into play. In 2010, a couple years after the financial crisis, President Barack Obama signed into law legislation put together by Democrats Chris Dodd and Barney Frank. The bill, referred to simply as Dodd-Frank, was the most far-reaching Wall Street reform in decades. The hope was that it would prevent banks from excessive risk-taking that led to the crisis.
This is all about the Dodd-Frank disaster.
But President Trump and congressional Republicans, with some Democrats, passed changes to Dodd-Frank. And under those changes, fewer banks were now deemed, quote, systematically important. SVB Bank was no longer systematically important, meaning it did not have to abide by the tougher regulations.
That size of a bank wasn't required to measure its liquidity in that way. And importantly, it was then, of course, not required to report it.
Now, a president is once again calling for reform.
I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses.
And Biden also says that now that the FDIC has taken over SVB, the bank's management, he says, will be fired. Also, the Federal Reserve has announced a new emergency lending program that will help get cash to banks that might also be in volatile situations in terms of their liquid assets. Steve.
Very well. All right, to be continued. Thanks, Chris. Now the